Adamma, it's a pleasure to have you on the program. Apologies for the technical glitch there. I wanted to hear, first of all, about this talk about repos and more banks assessing that repo window of the central bank. What do we make of that? What does that tell us about the tightness of the market right now?
Good afternoon, Wale, and thanks for having me. Okay, yeah, a lot of banks have been assessing the repo window due to the persistent illiquidity in the money market. And this is where they have to go to the central bank to borrow funds through collateralized lending. So as such, we have seen that the money market rates have been elevated to about 14 and 14.5 levels at the overnight and the OPR market.
All right, and in the foreign exchange market as well, we are seeing some volatility there. The NAFEX rate falling to 425, depreciating by about 3 naira 94 kobo. We've seen some moderate volatility in terms of that rate in the past, but this strikes me as quite significant. What do you make of this?
Oh yeah, you're very correct. You see, where the market has been trading at 419, 418 levels, and suddenly we see a 425, even trending up to 430 levels. I think that is quite significant. But you can actually attribute it that the I&E market has been illiquid for a long time, owing to various factors that have affected the market. And over time, the central bank has been sustaining their interventions. However, the demand for foreign exchange is far much more than the supply of funds in the market. And of course, this has caused the increase in the rates, which we are seeing right now. We see the rates trending from a 419 levels to a 425 up to 430 levels. And we still expect a further depreciation on this going forward.
And can we attribute this to maybe a shortage of forex relating to oil proceeds? As you know, there has been so much made of the oil theft in Nigeria over the last couple of months.
Yes, yes. The oil proceeds are supposed to have impacted on accretion to reserve. And so where we see a shortage, definitely you see that the central bank is not getting as much dollar receivables to actually fund obligations in the market. So that is a factor. And as such, other inputs into the reserves have not also been responding to that space. Like you see the foreign portfolio investors, not coming in at all because of, the various insecurity, instability in the market. So that, I can say, has actually, contributed to the fact that we have low dollar supply, and that currently we are not able to meet up with our current demand. And this also affects the rate of the dollar, to naira in the market.
And can you just reflect on the implications of this shortage of dollars for demand? Because I've heard in the past that a lot of importers, those who would typically access this I&E window, perhaps will front load their demand because they are now very concerned that there is a shortage. So how do you think this move, first of all, or in terms of the rate, and this recurring theme about a shortage of demand, which I've been hearing for a few days now?
Yeah, the shortage of demand have been on for about 2 years, towards the onset of the COVID pandemic, and it has been trending. So it's not really in news that the country has a shortage of dollar vis-a-vis the demand for it. So in terms of affecting businesses, of course, it has affected the business, given that the country is currently import-driven. And then, the importers do not have enough money to go and bring in goods and drive economic activity. However, there have been certain moves by the central bank to actually, come up with various policies, come up with various interventions, engagement with the exporters, trying to grow the foreign proceeds in the country, also trying to see how people can move away from an import-driven economy to an export-driven economy, and of course this will take some time, given that we are more import dependent, and that has actually affected and put a lot of pressure on the naira. So this is ongoing. We look forward to the central bank to come up with more policies, and we are ready to work with them to support them in their various policies which they have rolled out, and projects in terms of trying to drive a sustainable economy through developing our own products and having less reliance on the foreign exchange.